Boom. Oh, I see that. You can hear me. All right, ladies and gentlemen. Today we're going to talk about Bank of America, ticker symbol BAC. Let's just check some volume here. We're at 21. Perfect. 9. Love it. Wanted to let you know that figuring stuff out as we go for the second month. I figure that we should probably track the price because when I loaded up the maps today, there's some big things that you can see. So, in 30 seconds, we will go over it. We'll talk about Bank of America for positional, swing, and intraday traders. Just the first look, because this show is edutainment. It's not financial advice. This is just entertainment and education for those purposes. And if you want financial advice, go talk to your financial advisor. This is giving you a look and a starting point to understand your stocks. All right, with that said, I'm out of here, and I was really loud. Peace. Hi, social media world. My name's Alfred Gordon Liu. This is 8 at 8. 8 minutes starts right now. Today we're talking about S&P 500 and this whole mix. We just picked 20 companies like Warren Buffett has said and track, and hopefully you can make you don't need 20 companies, but you probably need a handful of companies to make a tremendous wealth if you understand them. So we're doing this, and today we're looking at Bank of America. It is in the sector of financials. In this, it is the XLF, standing for financials. So let's dive into this. If you haven't heard of Bank of America, because you're with me in Canada, this is what it is. It's a major bank. I think one of the biggest banks there is in America, and a lot of people, I guess, I don't know, hold their money there as well and also invest there. But let's talk about their stock. For those of you who are positional traders, you're buying and holding, thinking retirement, banks are stable. We can dollar cost average in this. Let's take a look at the moving average, the MACD, and the stochastics. So let's zoom in here. And what you'll notice already is since last month, this is where we put these Fibonacci's. This is where they were, up there. And now look where it's at. So like we said, we use these wonderful red arrows to indicate if we're in or out that month. And look at this. Got one there. So we didn't quite get our red arrow, but we get one here for sure. We get one here for sure. So that means it's moved below the moving average, and it's dropped significantly. Now there's more sellers at the start of this month. And also back in back in February is when we started to see some weakness in the stock. People started being real fearful. So as you can see, these arrows are a great indicator. It didn't flip yet, but the end of this month, this will solidify, indicating a downtrend. So if you've changed it already, then if you've exited your position, or if you're holding, you're going to be in for a ride down. How far down? I don't know. When these arrows go green, I'll let you know. But that's what we got right here. So let's move on from those positional traders that were thinking about holding Bank of America, just letting us do the thing. Let's take a look. Here is for swing traders, looking at sector rotation, the momentums, buying the dips, and we're going to use Bollinger Bands to do that. So let's zoom in here. Oh, wrong one. I am going to this one, where we're looking at Bollinger Bands to look at the volatility. And as you can see, we've already got the intraday Fibonacci's there from last month. But look at this right here. That is a great map to show you from last month, where the top of my head is, till now. It has gone down, right? We started to see weakness in the market. But where were the opportunities to buy? If you're a swing trader who does this, week after week, looking at this, you would probably say that it was an opportunity right here on that says, oh, I wonder if this works. Come on here. Nope, I didn't plug this in. My bad. But I can do this. Watch this. So this opportunity looks like it was February 24th. Right here, there was a nice little buying opportunity as it tried to get back to fair value. And again, another opportunity right here just happened a few days ago. I bet you this is Monday, where everything was kind of having dropped. Tuesday too. Now it's rebounding today, trying to get back to this green line fair value. And what kind of moves these things? Again, it is these wonderful, wonderful dates like dividend days where people collect their dividend and then they get out because they see that decline, but they want to capture this. So that's something to know for you swing traders after earnings call and also dividends. People maybe exodus after they got their dividends for the month or for the quarter or for the year, depending on how the dividend structure is set up. So there is a look at swing trading. Let's take a look at going back to here, earnings. So they had their earnings January 19th, as you can see there. The next time they're going to have their earnings is April 18th. And we're looking a little bit better. The street is expecting to do a little bit better at EPS from 0.76 to 0.78. Last time they gave us a great surprise, a good one. We're hoping for the same thing here. So probably around 0.8 EPS growth for those of you who are doing valuations. And let's take a look at the economic calendar. Today it's pretty light on well, it's picked up from this week. Well, 80 companies doing earning calls, 3 doing stock splits, 6 IPOs, and 74 economic events, which I really want to kind of draw because this has been the flavor of the month. This is all the economic events that are going to happen. You'll see France is reporting, Czech is reporting. I don't even know all these. Mexico, U.S. here, they started to report at 12 p.m. That's 8 o'clock our time, so it's right now. We're starting to get some of these numbers for NBA purchase. But what really kind of gets me is obviously the mortgage market, which we'll be getting to. But here's energy. Look at all this EIA, weekly gasoline, heat oil stock, weekly gasoline, distilled, crude, right? This is always going to swing the market. And they're going to do some major reporting at 3:30 Eastern time, which is 12:30 our Pacific Standard Time. We don't have any kind of crazy estimates here, but we're going to see what they give to us. So these are the market expectations, what they're actually going to deliver. It might change. That's why we're seeing maybe a tank. So I wish this bar kind of held its thing. So this is the expectation, and the one before is the actual reported. So we'll get these numbers, and I expect it to swing the markets. Already, crude energy oil has pulled back after this wonderful run up, and it's still kind of running in my opinion. And how do I know that? Let's take a look at this. This is another tool that we use mostly for more kind of advanced trading, but this is kind of talking about sectors, and I wanted to show you this. As you can see, this says leading, improving, lagging, and weakening. This is called the RRG graph. It's a relative rotation. And you can see over the last couple of days, XLE has just rocketed. But I wanted to, I'm in the way here. I'm going to move over here. But I want to show you what it looks like over a couple of weeks. I had a friend of mine, another investor friend, tell me about some energy and what was happening. They got in last year around October, November. And look at this. This is a weekly chart. So every little dot is a week on XLE. Energy. Look at this. Week after week, it has been rocketing from a really weak position when we had, maybe $60, $40 a crude barrel, and now up to 90, 130. The momentum is going out the roof. So I got 24 seconds. So this is what we're gonna see. So let's move on to intraday here. I am gonna pause it because I went on a little tangent. I struggle with how much to tell you guys. I just want to pour into all of you. But let's go into our intraday charts. I've paused it. As you know, we don't even see our Fibonacci's from last month because the market has done a crazy tank. Look, it was up here that we saw around 50. I think it was probably around 48. If I'm going to just take the middle of this, 48, 49. Now we're down to 41. So, as you know, those things don't lie, man. No joke. So let's take a new one here and let's get this all set up. This is the last 5 days that I got it set up for. Yeah, 5 days. Let's take a look at our another Fibonacci that we'll put on. We're going to take just this past week. We'll go to the lows of the market. We'll try to pick some highs, which is hitting some all-time highs now, which is kind of cool. So we might even have to go further back. As you can see, if we zoom in, it's a nice little U kind of channel that's been in the past week. So it's returning. This is why I show you cyclical rotational graphs, because that cycle is coming up. But this is a beautiful, beautiful chart because it's showing us the relative strength and what is happening here. So let's just take a look. A lot of green. So I'm just gonna go green just because we haven't been rocking green recently. As you can see right now, in this every candle is 1 minute. It is testing that ceiling at 41.26. As you can see, it just hit that ceiling. Now it's coming back down. But I think there's some really good strength. Some of the Fibonacci's haven't caught in those lines yet, but for today, I would say this is probably a really good floor. So I'm going to circle this red. For those of you who are doing intraday trading, I'm taking this. I'm going to indicate this as, you know, a good floor. This level is about 49.2. So let's just call it 41. You're going to see it bouncing around here, hopefully to the upside. It's going to test again that ceiling and bust through it. So those are things that I wanted to show you. Let's get this pony show back on the road. Pressing that play button, getting back to this. I love that we're going to a second month so you can actually see those choices. If you held or not, you drop. You would have dropped $8. And I gotta struggle with giving you more condensed information. I just want to give it to y'all. But this is what we got here, Bank of America. As you know, it has dropped down. I think my crystal ball, I don't have one, but we're going to see a lot of hurting coming up. War is cutting off oil supplies, cutting off wheat supply, and I think we're overall seeing a weakness in the market. So hopefully can this war bring us back? I hope. Don't really want to say war, but I don't know what else other tricks up the Fed sleeve that they do if they're going to tighten next week. So something to look out for. Interesting times. That's why I'm here. I don't want you to lose your money, and I got to get the kids ready for school. That's not my hand. All right, you're loud. You want to see it? You want to come? Mm-hmm. All right, let's get you a little spot right here. Oh God. There you go. Now they can see you. Balance. Boom! Who's that?
Hi.
Can you read what that says up there? In blue? Oh, your eyes. We gotta check your eyes. You can't see that far?
BAC.
BAC. Oh, you're looking at that, yeah. That's the ticker symbol. Oh, here comes another one. Okay, everybody. Come on down. Come on down. Come on down. Come on down. Next, rotational. Just like sector rotation work, rotating kids, stand up. Peekaboo, everybody.
Pikachu.
Pikachu. All right.
Guy.
This is what you do. You make your money in the morning, trading, because the market's open here in the morning, 6:30. That's still time to get them changed and get them fed, get their hair done. Now we got to get their backpacks, shoes on, get them out the door. All right, everybody. Peace.